Now, when you have this money, yes, it's a loan, but guess what? The insurance company is not going to come banging on your door. Why? Because you are in control. Why are you in control? It's because the insurance company has the best collateral in the world, and that's your life. Let's talk about the golden rule. So when I say the golden rule, the first thing that probably pops in your head is the most common one, which is do unto others what you would want others do unto you, right? There is another golden rule, and it comes from this book, Becoming Your Own Banker by R. Nelson Nash. If you don't have a copy, make sure you get one. The golden rule, as per R. Nelson Nash, is those who have the gold makes the rules. What does that mean? What that essentially means is the one who has the control of majority of the wealth or money or gold in this case makes the rules. So how can we set a parallel in our lives? Right now, let's talk about the ways that we bank. So there are a couple ways. One is we use cash to purchase things and goods and services and investments. And then the second way is we finance via a loan of some sort or a line of credit or a home equity line of credit, which we use in order to do the same purchase of the goods, services, or investments. Now, both of these ways of banking involves a certain party. Of course, yourself, but there's another party that's pretty common, and that party is a bank, someone else's bank, a third-party institution that is called a bank. And so when you are dealing with banks, guess who sets the rules? It's definitely not you. And this is especially true when you're financing things. Okay, when you're taking out a loan, line of credit, or a home equity line of credit, whenever you get access to that through a third-party institution called a bank, they set the rules. They set what the repayment amount will be. They set how often you should be repaying. Yeah, they'll give you the option of, how often you want to, but it's they setting the options. And then they also determine, the term, the amortization, for those who have mortgages. Everything is set by the bank. You have zero control over that. You most of the time have to take what they give you, or you may be in a position where you can negotiate a little, but you're definitely not negotiating to the point where you get everything in your favor. It's definitely favored towards the people who control the gold. And in this case, it's the bank. But what if there was a scenario where we would set the rules? And that's where the process of becoming your own banker, the infinite banking concept, comes into play. You see, the problem in our world is that we work hard to earn money, but someone else gets it. And in this case, that someone else is a third-party institution called a bank. What if we could maintain control of the hard-earned money that we earn? And so by implementing the process of becoming your own banker, you can do that. And how does that work? So what you would do is you would implement the process utilizing a tool, and that tool is a participating dividend-paying whole life policy. So when you have this tool, what it allows you to do, it allows you to take control of your capital over time. How? Well, instead of having majority of your income, your hard-earned income, coming in and then sitting in someone else's bank, you take a portion of that and you start your own bank. You start your own private system via a life insurance, whole life insurance policy. And so now the capital that you use to start this system is the same capital that you would have otherwise kept in that third-party institution, someone else's bank. It's the same capital. You're just redirecting where that money resides. And so now this money is in your own system. So guess what? Going back to the rule, those who have the gold makes the rules. So how does that come into play in this scenario? Well, when you have your own system, and before I go on a bit, I'm not going to go on into the whole detail of the becoming your own banker process. If you want to learn more about that, I'd suggest checking out watchabc.com below to watch the on-demand training to learn in depth of what this is all about. when you start the system and you have a policy, you now have the gold. And so you get to make the rules. How? When you have a properly designed participating dividend paying whole life policy, the insurance company allows you to borrow against the cash value. So this cash value essentially represents your money. The money that the insurance company gives you is their money. So where's your money? If you said it's inside the policy, you're absolutely correct. And so the money in your hand is the insurance company's money. And now you get to use this to do whatever it is that you wanted to do, but you would have done otherwise using someone else's banking system. But this time you're using your own. And so because you're using the insurance company's money, your money is safe and sound inside the policy, growing every single day. Why does it grow every single day? It's because there are some contractual guarantees between the insurance company and you, the policy owner. And that is, by age 100, the death benefit and the cash value must be the same. Okay. Again, for more details on that, check watchibc.com and you go into further details on that. But now when the insurance company gives you this money to use, guess what? First off, in order to get that money, you simply have to make a quick request and let them know that how much you want. Okay. And it's dependent on how much cash value you have access to inside your policy. You let them know how much you want and you let them know where to deposit that money. And the insurance company will deposit that money. Within 5 to 7 business days, it should show up in your account. Now, you didn't have to do any credit score checks. You didn't have to submit your recent stubs. Okay, there was none of that required. It simply was a simple request and the money showed up. Now, when you have this money, yes, it's a loan, but guess what? The insurance company is not going to come banging on your door or is not going to send you a document letting you know when to make the repayments, how much you should be repaying, because you are in control of that. You get to decide how often you want to make payments, how much payments you want to make. Heck, even if you chose to take a vacation from your payments, meaning not put a repayment 1 month, you can do that. The insurance company is not going to come knocking on your door calling you, hey, where's your payment? Why? Because you are in control. Why are you in control? It's because the insurance company has the best collateral in the world, and that's your life. You see, when they give you the money, they hold your cash value as collateral, and they put a lien on your death benefit. So they know that, at a certain point, you will become an angel, and when that day occurs, they know that they're going to get paid, because if there is an outstanding loan balance, that balance would simply be deducted from the overall death benefit that would be otherwise paid out to your beneficiaries. So they simply deduct whatever the loan balance was, and then the remaining death benefit amount is paid out tax-free to your beneficiaries. What I just explained to you is a system that puts you in control of the gold, in turn making you set the rules. It's pretty powerful stuff. And so I encourage you to keep learning, to keep understanding how this process works. There's more videos in our YouTube channel here, everywhere. Check out our content, keep learning, keep progressing, and I'll catch you in the next video. Sayonara.